Michael Kontopoulos, Richard Bernstein Advisors, Deputy Chief Investment Officer David Seif, Nomura, Chief Economist for Developed Markets. All right, gentlemen, who wants to start? So this is probably, David, this is probably about what you were expecting, is it not?
Yeah, it's even a little bit softer. And so that's great news for the Fed in terms of their ability to cut in October, which didn't really seem that much in doubt, but also to follow the dot plot in December. You've had some people on the Fed who are on the more hawkish side of things who've since September pushed back on what seemed like a dovish shift. And of course, we haven't gotten very much data since then, of course, but what little data we do have now from just now does appear to make it seem like inflation fears are at least a little bit, we're a little bit too high given what we're getting in so far.
So the market has been strong, Michael, and Rick makes that point. Any AI tailwind that makes it less fundamentally based than we think?
No, I think, listen, fundamentals, Joe, are pretty strong right now, and there's no doubt about it. You know, the economy is not weak per se. I mean, you've had pockets of weakening. I really do believe we're in a K-shaped economy where the lower end is maybe not quite as strong as the higher end. Today's number for me is actually about broadening more than it is about AI, although probably the first step forward is going to be more about AI and some of the momentum plays, just because they are juiced by liquidity and we do have easy financial conditions, and this will sort of portend more of that. But, you know, I think you can make an argument that you get some broadening here, and it's not just about AI.
Yeah. I mean, it is kind of, you know, latest is, Rick, we're not talking to Canada at all. We're so mad that you did an unedited or an edited version of Ronald Reagan, and 2 weeks ago it was 100% tariffs on China, and all the market's done really is shrug that off and head higher.
Well, is it shrugging it off, or is it going along with the notion that it believes the president and the administration will use their strange style but come up ultimately successful? Listen, I don't think the administration's necessarily bluffing. I think what the market's concentrating on is that Canada needs the U.S. more than the U.S. needs more than Canada. China needs U.S. more than the U.S. needs China. That's what I think the markets are focusing on, not so much all the issues with Trump that the media seems to focus on more directly.
Right. So, guys, do you think, give each of your view on how many cuts we get and when they come?
Yeah, we think there's going to be 2 more cuts this year, so 25 bips in both October and December. And then we see 3 more cuts next year, 1 more in March under the Powell Fed, and then 2 more when a new Fed chair, presumably somebody considerably more dovish than Powell himself, takes over.
Who do you have your money on for that?
I think that it's probably most likely to be a Trump insider, and so
Hassett?
Kevin Hassett, Steve Myron, who's currently a governor, these both seem like realistic possibilities.
Waller was early on the whole cutting thing, though, right? He's a true believer, Michael.
He is. I mean, you have a little bit of both on the Fed right now. I actually would take a little bit of the other side from David. You know, certainly the Fed's going to cut in October. We'll see about December. I'm not, you know, calling December as being a sure thing quite yet. For me, this rhymes quite a bit with September of last year, where the Fed got all worked up that the labor market had tripped the Somme rule and went ahead and cut interest rates for the first time ever into a really strong economy and accelerating earnings growth environment.
A half a point on unemployment causes a...
That's right.
Yeah.
And you know, this seems very similar. You have weakening labor market, but not a weak labor market. You've got inflation that, regardless of missing today, was above the Fed's target. You've got some of the easiest financial conditions in history, given where CPI is today. You know, I think the Fed could cut in October, and that could ultimately prove to be a bit of a mistake. Bill Dudley wrote about this yesterday and lead to a tighter than expected Fed as we go into year end of next year.
All right, both gentlemen, thanks. Rick, so you think eventually we're not getting a 2 and the Fed's going to notice that? So you think down the road this is not all roses, all bed of roses?
Yeah, listen, I think that no matter what the Fed does, and I don't think that the Fed's necessarily going to ease because of Trump's picks, the market still can push back. The market yields are still higher than they were on that first September 24 cut. The 10-year was in the 360s. The market has a life of its own despite the Fed.